Okay, make sure everybody can hear me. I think I'm going to have to hang out close to the microphone. Everybody hear me okay? Okay, my name is Chuck Hudson. I'm a regional market executive with First Commerce Credit Union, and I have done these presentations at Chipola for a number of years now. I'm trying to think back, Dr. Spires, but it's been, 5, 6, 7, 8 years. And I did one at McClay High School in Tallahassee a few months ago. So I've enjoyed doing it, and the intent of this is not to alarm you, it's not to scare you, it's just kind of to bring some ideas to mind that maybe you hadn't thought about, maybe you've not been exposed to. And it's one of those things that, the saying, experience is the best education, but the tuition can be very expensive sometimes. So if you can learn something from this, and maybe, maybe I remember him talking about that, maybe I should do this or that, maybe it can help preserve you some angst in the future. So First Commerce has been around since about 1940, and we started this about 10 years ago as part of our financial literacy outreach. And so we go to high schools. We've done some stuff at TCC, McClay, some of the local high schools. So it's just a good way to kind of expose students, high school, college students, to some ideas maybe they've not had any maybe a partial exposure to, but not completely. So stop me, raise your hand, anything you got going on, questions. We can have questions after the fact, during the presentation, just whatever you got, you let me know. Got a couple, everybody got a ticket. We got some gift cards going around. We're going to do some door prize drawings for that afterwards. So if you don't have a ticket, let me know. So anyway, let's talk a little bit about kind of credit, identity theft, and budgeting, and really the interrelation between those three things. And as we get going, you may think those are three separate areas, and they are and they can be, but to some point, a problem with one can cause problems on the other side of things. So question for you. First of all, has anybody ever heard me do this presentation before? Anybody? Okay, that's good. That's good. How many here know what your credit score is? Okay. We got a few here. Just speak out. What would you think would be an example of a good credit score versus one that's maybe not so hot? 800's not bad. That's real good. What do you think would be a bad score? Yeah, 500, you're getting down there. I've seen a few lower and I've seen a few higher. It's almost you have to work as hard to get a 450 as you do to get an 850, So there's some collateral material there, and you can refer to that. There's a bunch of information that I really not going to have time to cover. We're going to kind of hit the high points here and then kind of go from there. So, what is credit? What is credit in your mind? Really, it's the art of borrowing money for some purpose that you may need. It could be buying a home. It could be credit card debt, revolving debt. It could be buying a car, a boat, an RV. Anything that you need to borrow money for is kind of used as your credit score. The credit score is not used exclusively for borrowing money. You can use credit scores for other factors, for approvals, for leases, things like that. But typically, the credit score is used for borrowing money. Why would you need that, as we mentioned? Why would you need to borrow money if you have the cash? What do you think? So if you got plenty of cash sitting around, why would you want to borrow money? Anybody? Well, up until recently, mortgage rates, 15-year mortgage rates were about 2.25%. And up until recently, the stock market and other investments were performing a whole lot better than 2.25%. So if you got money sitting around, it's earning you 5, 6, 7, 8, 10%, and you can get that money at 2.25%, it's probably a good deal. Things have changed a little bit recently, but hopefully that's a short-term fluctuation in the market. What about the credit score? How is it calculated? Any ideas on how it's calculated? Anyone? Basically, it's a formula. There are three credit reporting agencies that most people, when you borrow money for a mortgage, they call something called a tri-merge report. Tri-merges mean there's Equifax, Experian, and TransUnion. Those are the three primary credit reporting agencies in the United States. And really, each one has a proprietary formula, but it's really based on how many accounts do you have open, how long have those accounts been open, how have you paid on those accounts, what's the relation, for example, of let's just say you've got a $10,000 credit card and your balance is running about $9,800. The model sees that and it's thinking this person has used up all of their funds available on the credit card, so something's going on. So that can tend to ding your score. As an ideal rule, if you've got various open accounts, really don't want to have more than about 35-40% utilization of those open lines of credit, because the credit bureau model starts seeing things and it's like, that's just something's wrong here. We talked about late payments. Really, people have late payments. Occasionally things happen, I understand that, but really where it really can hurt your credit score, and I mean knock it down 150, 200 points, is when you get an over 30. So your payment is due on January the 1st, you make the payment on February the 5th. That over 30 can really put you in a bad spot. And what I've seen happen is it becomes a trend and a pattern. Well, I made the payment for January 1 on February 1, I will make the next payment on March the 5th, and so on. So it's starting to show you over 30, 3 and 4 and 5 times. That can really have a very detrimental effect on your credit score. And really the credit score is a function of your grades here. Obviously you are A students, I understand, but an A score versus a B score or a C score. And I want to give you an example real quick, and I kind of ran these numbers, and to me it's pretty powerful. It's kind of a for example type deal. Let's just say that you're buying a home for $200,000. Okay, you're putting $40,000 cash down. Okay, they pull your credit score and you got a 740. It's not quite the 800 you mentioned, but a 740 is pretty good. Okay, party B here, same scenario, $200,000 purchase price, $160,000 loan, puts down $40,000. The other person's got a credit score of 640. Not bad. You can get it done, right? So, so what's the big deal? I can get it done at 740, I can get it done at 640. What it's really going to qualify you for is a lower rate. And we'll talk about it a little bit more in depth, but in this scenario I ran back when rates, before they jumped up a little bit, you could get a 3.5% loan for 30 years, okay, with a score of 740. You could get a 5.5% for 30 years with a 640. The difference on that was about $189 per month. You get a job, you're making good money, well, what's the big deal? A couple $100 a month. Well, it is a couple $100 a month. It's about $2,200 a year, and over the life of that loan, it's about $68,000 that you will pay more in interest for having a credit score that's below, it's almost at the bottom of the approval category. So just something to think about. The credit scores, we'll talk about the range of scores in a little bit, but in talking about how the scores are computed, typically, payment history comprises about 35% of that. So how you have paid, bear in mind, those are things that are over 30 days. Anything under 30 days, if you have a late payment, the scoring model is not going to pick that up. Okay, you may pay a little late fee and you move on, but the scoring model never picks that up. It's only stuff over 30 days. Amount owed in relation to limits, we talked about that. That's 30%. So example, you've got 5 cards and you're running at 90% of balance capacity. That's going to give you a ding. Length of credit history. How long have these accounts been open? Is it all brand new credit? Because the model doesn't know how to judge you. The longer the history is, the more it can create a model and a track record of how this person is paid over time. And last but not least is types of credit. If you're going out and getting a lot of revolving debt, new credit, unsecured type debt, the model doesn't view that very favorably as well. So it's just something that I think you need to take a look at. Has everybody here looked at their credit report? Just out of curiosity? If you have, raise your hand. 1, 2, okay, you have, okay. I would encourage you, you can go to freecreditreport.com and you can get a copy of your credit report. Everybody can get that. You're entitled to it. It doesn't cost you anything. And there's really 2 primary reasons why I recommend you do that. And number 1 is you don't know what you don't know. Identity theft, which we're going to talk about a little bit, is rampant. If you got something on there that's not accurate, you want to address it right now. What you don't want to do is to let it linger and to have a problem when you try to buy something for the first time, to do something, then there's a problem. So the best thing to do is really check your credit report. It's not going to give you a score per se, but it's going to give you a report. If there's something on there that's negative, that you don't agree with, that's not correct, you can actually contact all 3 credit reporting agencies and report that. So I'd really encourage you to do that. How do you get credit if you don't have credit? And I've been there. So how do you get credit if you've never had any credit of any kind and you're looking to, get a car, get a credit card? In many cases, if you don't have anything at all, that can involve mom or dad, aunt, uncle, being a co-signer for you. And so essentially what they're doing is putting their good credit and their good name on the line, attesting for you, saying that you'll make the payments as agreed. So that's just something to consider as well. I passed out a credit quiz here. I'm going to run through this. What time do we need to, Dr. Spires, need to be out of here by?
Probably about 11:30.
Okay, very well. So I'm going to kind of keep this moving along, but it's just something to, everybody's got the credit quiz score. Okay, so answer out loud here. Feel free to. Checking my own credit hurts my score. What do you think? What's that? It can. What can hurt your score more than if you go to a car dealership and you say, I want to buy a car today, and they start taking your application and send it to about 15 different financing sources. That's really not ideal. That's not what you want. If you go to buy a car, you need to really have that, say, listen, pull my credit bureau, but don't pull it 15 times, particularly over a course of 3 or 4 days. My score from all 3 bureaus are the same. What do you think? No, they're not. This is a proprietary model. They should be fairly close, 10, 15, 20 points. They should be fairly close because at the end of the day, they're using the same factors. It's just they're placing a different criteria percentage on, for example, length of time accounts have been open versus delinquency, things of that nature. This is a good one. I like this one. Payment history is the largest factor used to calculate my score. It's a big one. It's a real big one, particularly when you've had everything just perfect and you start having some problems. The over 30 start hitting. I've seen a score drop 200 points in the course of about 2 months. It can really bang it up. For scoring purposes, information on my credit report that's 5 years old matters as much as information that's 1 year old. What do you think? Who says yes? You say yes? Who says no? No. Yeah, so what it's looking like, this is like anything else. It's looking at the more recent stuff, it's going to have a bigger factor, positive or negative. The older stuff, over time, the water's under the bridge, it'll eventually kind of go away and dissipate, but the current stuff is what it places a higher priority on. My favorite question here, and we'll get into some further discussion here, my income is factored into my score. Your income is factored into your score. What do you think? No? Who says yes? Anybody say yes? You think yes? Yes. So I can look, I've been doing this long enough, I can look at a credit report and about 85% of the time I can tell you what that person makes. Because people have a tendency to utilize about 35-40% of their income for debt payments. But the actual model itself has no idea what you make. I'll see people sometimes that pay for everything in cash. Okay, that's fine. So they don't really, the score has no model on that. It gets into an interesting conversation though in terms of if the credit score it's not affected by your income, and we agree that it's not here, what does that look like when someone goes to borrow money? We want income verification, right? Probably want tax returns. We probably want tax returns primarily. So what do you think's going on here if somebody comes in with an 850 Beacon score, everything is just perfect. I mean, perfect. And we get the credit score, get the tax returns, and they've got boats, condos, cars, houses, and they're showing they're making about, $35,000 a year for the past 3 or 4 years. What do you think's going on there? Because the money's got to come from somewhere, right? What's going on? Well, that's between them and the IRS. So we can only qualify someone on what they're actually reporting on their tax returns. Now, there's exceptions of people that have large cash reserves that are using to pay it, and that's perfectly fine. But in many cases, the individual there may not be reporting all the income that they earn. That we see that happening occasionally. Good question here. I can get a lower interest rate with a score of 850 than a score of 810. What do you think? Who says yes? 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 Any no's? Not sure? Typically, 720 is the cut for you to get the best score available. Now, for bragging purposes, 850 is better than 810. But really, anything above a 720, you're going to get the best rates that an entity, a financing institution, a lender has to offer. But again, the good news is if you got an 850 score and something happens, something gets sideways with you, you've got some cushion right there. If you've got, I'm going to talk about this a little further, if you've got, let's just say your mid-score, and again, the mid-score, Equifax, Experian, TransUnion, those are the three agencies, you got a score of 645, okay? You're trying to get qualified for a home purchase, okay? Something happens. Well, is that something your fault? Maybe, maybe not. Let's just say you're a victim of identity theft. Someone opens up a credit card in your name that you're not aware of. And we're going to get to this a little further, but they don't typically make payments when they open up a credit card. They get the money and you get the bill and you're like, holy smokes, what's going on here? So you've got an over 30 on your credit report. That 640 has now gone to a 620. Now you're out of the money for the home purchase you're planning on. So I'm going to talk about some due diligence you can do on your part to try to prevent that kind of thing from happening. But that's real. I've seen that happen before. So that's the benefit of having a score so high as that is it gives you some cushion if something happens, your fault, not your fault, whatever, in terms of any planned purchases or financing you may need coming up. We talked about this. Carrying a balance close to your limit can harm your score. If you've never had any credit, do you think you have a credit score or not? You don't. It's a blank slate. It's not bad. It's not good. It's just a blank slate. So really what you begin to do is you want to begin the process of creating credit. And we talked about getting a cosigner. We talked about, one thing that I've done quite often is someone that comes in and they're aware they don't have any credit. They've checked their bureau. They don't have a need right now, but they know they're going to in the near future. So most institutions have something called a shared secured loan, which is essentially a process by which I come in, I have no credit, and I say, I need to borrow $2,000. So I said, no problem. So we cut a check for $2,000, we give it to you, you give it right back to us, we stick it in a savings account and lock it down, and you make payments on that money over the course of 18, 24 months. Now the good news is that will create a line of credit for you, that your credit's been made, payments have been made as agreed. Now what you don't want to do, I've seen this happen before too, is somebody does a shared secured loan, things kind of get away from them, they lose track of it, and then they've got a bunch of over 30s for the shared secured loans, and eventually the institution will take those savings funds, pay that loan off, and it goes away. But you had a line of credit you created, but it also has got 3 or 4 over 30-day delinquencies on it. That's really the opposite of what you want to do because that's really been counterproductive. If I need to clean up errors on my credit report, using a credit repair company is the best method to do so. What do you think? You've seen it advertised. They're on TV. You've seen them on radio. What do you think? I would be leery of that. I think the best thing to do is if you've got a problem, go directly to the source. If it's it could be whatever, Comcast, could be Waste Management, it could be a financial institution. Go directly to them and dispute it. You can dispute it with the credit bureau as well. You can put notes on the credit bureau is regarding XYZ charge. I did not authorize this. I'm unaware of it. And that, you just have to stay after it though. But I think that's the best policy. And we talked about Equifax being the primary source of credit in the Southeast. So mortgage loan is going to be all three. If you go to buy a car, most of the institutions I'm familiar with, Equifax is their go-to credit reporting agency. That's kind of the go-to there. And we talked about, the identity theft and something being opened up in your name that's unauthorized can cause all kind of problems. We're going to be here, for 45 minutes, something like that. And the time we're here, about 1,200 people will be the victim of identity theft. So, it's rampant. How many here have been or know someone that's been the victim of identity theft? I think it's probably a lot more than that. You think about, have you had any unauthorized charges on your account that you didn't authorize? Okay, that's identity theft. Someone has taken your card number, and again, in most cases, I hope you got reimbursed or made whole by your institution, your bank or your credit union. But again, this is not a victimless crime. Somebody has to sustain and pay for that loss, whether it be the credit card company, whether it be the institution. But I see it daily. It's just super rampant out there. We're going to talk about identity theft and talk about some things you can do to hopefully protect yourself and your family from that happening. So, really, what is identity theft? It's really unauthorized use or attempted use of an existing account. So someone is, this has been going on for 100 years. Somebody forges a check. Somebody finds a check, they forge it. That's identity theft. Someone gets a copy of your check in the mail that you sent for a legitimate payment. They get a copy of it. You can order checks whenever you want to from whomever you want to. They get the checks, they write it to a merchant. That's an issue of instance of identity theft. Unauthorized or attempted use of personal information to open a new account. Okay, so a lot of this back during 2020 and COVID, we had the PPP loans. A lot of unauthorized people opening up PPP loans in the name of businesses to get funds fraudulently from the Small Business Administration. For a while there, Tampa, Florida was the epicenter of filing of false tax returns. Okay, so you picture this, you're filing your tax return, right? You're going to hopefully get a refund, and you find out that somebody's already filed your tax return and they have gotten your refund instead. They don't typically file the returns when you're getting back a refund. It's only when you're paying in. So when you're paying in, they don't typically try to defraud you. And misuse of personal information for fraudulent purposes. So there's a bunch of ways out here that these things can be misconstrued. And we talked about, a guy asked me this morning, how can I protect myself against identity theft? Well, there's really never anything that's perfect, but I would say really three things. The first thing is you have a checking account. Most of you have checking accounts, I'm assuming, savings accounts, checking accounts. Check that activity every single day. Every single day. In the morning, you have an app on your phone. Look at the activity. Is it legitimate? Is it correct? Because it's infinitely easier for you to address that problem on day one than, I check it once a month when I get my statement, and then you've got a mess to deal with. Day one, check it every single day. That goes for credit cards and for accounts. Any account you got, look at it every single day. Huge help. Number two is I know several people, and once you check your credit report, we talked about doing that, you can lock your credit report. There's no reason you can't do that. You can lock it down. They're going to give you a code, and that could be for all three bureaus, and you put a lock on it. If you don't have an immediate need for that credit, lock it. The bad guys, the good guys, nobody can get into it without you authorizing that code to unlock it. Particularly for elderly parents, grandparents, they're past their days of borrowing money, but they're not past the days of people trying to take advantage of them and defraud them for what they've worked hard for their whole life. So I would encourage you, even young nephews, nieces, siblings, check the credit report. See what's on there. If it's clear as you think it's clear, great. If it's not, address it. Lock it down, though. There's nothing that prevents you from doing that. I will tell you, though, please keep that code you've got very secure, because it's very, very difficult to get access to the credit reports if you lost that code. And I've seen that happen before, too. A couple things you can do. And just be mindful. Be mindful of your accounts. Be mindful of, you've got a schedule of payments. Be mindful of when they come out. Don't take it for granted that this account should have come out on the 15th, but it didn't, so that's not my problem. Well, it's going to be your problem, so just make sure that everything you have, I even have like a little chart, I have an accounting for it. I'm checking it off every morning. Money that should have gone in, I'm checking it off. Money that should have gone out, I'm checking it off. If something didn't happen, I'm finding out what's going on right then, and I guess the best way to address this. Talking about some forms that identity theft can take, this changes by the day almost, but these are some, you hate to say classics, but looking for love, right? Everybody's looking for love. Everybody remembers the song from Johnny Lee, Looking for Love? It's a true story. It happened in Tallahassee, one of our offices over there, and it's not a good story, but it's a true one. So this lady finds the love of her life online, right? Okay. He lives in England, and she's going to move to England. They're going to be married and live happily ever after, right? What could go wrong with that? This doesn't happen over a weekend. This happens over the course of months and months and months. So this guy has obviously, he says he lives in England. He could live in Chipola. We don't know where he's at, but in her mind, he lives in England, and so he's setting this elaborate ruse up for her to come to England, and they live happily ever after. Well, he's starting a business up, and he needs some money, okay? About $50,000, if I recall. Well, the lady in question didn't have the $50,000, right? But you know what she does have? She has a home that's paid for with a bunch of equity in it. So you can borrow against your home and use that money for home improvements, or in this case, she decided to borrow the money on her home to help her boyfriend, quote unquote, start his new business. And anytime we have something like this, obviously, we're engaged in conversations and we're trying to understand the use of the funds, the plans, and we try to, something that doesn't just sound just right, try to dissuade the person from doing that because it doesn't sound just right. But she decides to proceed with it and sends her boyfriend the $50,000. Now, as you might imagine, the relationship is soon over, but her problems are just beginning because she's got a $50,000 debt on her home that is her responsibility to pay. And sadly enough, she ends up losing her home over this. So that's one of the most extreme examples I've seen of this, but I mean, it takes so many different forms. So whether it's online solicitations, phone calls, just be diligent, be aware of it, and if it sounds almost too good to be true, it probably is. So really question things like this. Children and the elderly can be most vulnerable. I've seen people taking, I say children, 9, 10, 11 years old, taking their credit and using that for the benefit of applying for credit. Elderly can be very vulnerable as it comes to any type of scam. So particularly as it regards borrowing money, I really, really think it's a good idea to do that for your parents or grandparents that are no longer in the borrowing mode and they really help protect them. Dumpster diving. Who's ever heard of dumpster diving? Yeah, so what the bad guys are doing is and this was really more prevalent before the digital age, but we're a long way from being a fully digital society in terms of there's a lot of paper records out there floating around. So they're basically hiring someone to jump in a dumpster and try to find information. So what are they looking for? Well, financial institutions and medical offices tend to be have the most likelihood to have some of your information. Social security numbers, addresses, personal information, anything they can use to try to replicate you and your identity to file false tax returns, to take out a loan in your name, that type of thing. Fake lotteries, had a bunch of these. These take a bunch of different forms. These are all fake cashier's checks that have crossed my desk at some point in the last, few years. I'll pass them around, take a look at them. Been exposed to it. So really what that is, again, there's always a hook, right? They're not just sending out a fake cashier's check just for the heck of it. There's always a hook. And sometimes it's a very well-written, elaborate plan. I've seen The Secret Shopper. So they're going to send you a check for $1,000, right? Send you a check for $1,000. I never quite figured out the logic of this next part, but they want you to do something. Secret shopping, take a poll, whatever it may be. But they want you to send you some portion of that check back. I never quite figured why they just net it out, but they want to send you the $1,000. You're going to send them back, say, $250, and you're going to keep $750, right? What could go wrong with that? Well, the checks that you see there, they're not good. They look good. Some of the money orders look very good. And we've got 50,000 members of the credit union, and as much as we want to, it's not possible. If you've had an account in good standing with us for a number of years, we can't look at every single check and say, yeah, we take the check, assume that you've done your due diligence, we deposit it. In many cases, you've had an account for a long time. We're not putting a hold on a $1,000 check. We're not trying to cause you any difficulty. So the check is deposited. In most all cases, you've got money in your account. So you're going to take out $250. It's real money. Okay, it's not fake money. It's real money. And you're going to send this to the person that sent you the solicitation. The $1,000 check, in a matter of about 3 days, is going to come back as being no good. So the $1,000 you deposited is now being withdrawn from your account, but you sent them $250 of your good funds. That, and again, $250, multiply that times 100 or 1,000 of the scam they're running, and you can see it can be fairly lucrative in terms of what they're trying to accomplish. But it gets a lot more sophisticated than that. I've had people solicited by people that say do landscaping, and they're solicited by someone that say they own a house here locally, the address is real, okay, and they say, hey, come look at doing some work for us. And the same type of thing. So when the person can see the actual physical property and the address is real, well, this must be real, right? Well, no, it's not always, not always. So you do a little further digging, you determine that the person that contacted you doesn't in fact own the property. The person that owns the property may be out of town for vacation in the summer, whatever it may be. So I've seen a lot of that recently. A lot of phishing, phishing with a P, not an F, in which people are sending you emails, disguising the email as being from your financial institution, and then as an attempt to get you to provide them information, card numbers, social security numbers, all of the like. So we see that every single day. So what can you do? We talked about checking your deposit accounts frequently. I'm not trying to sell you anything, but you've seen these credit reporting, these credit monitoring agencies. They have value. They'll notify you. And to me, the most valuable thing, and some of the card services do it for free, but to me, this is the most valuable thing that you can get, whether it's free or whether you pay for it, is a notification of any new credit bureau pull. So think of the value if you're out there bumping along and you get a notification that you had a credit bureau pull from Discover Card, for example. American Express, doesn't really matter. You have no knowledge of that. You have not applied for Discover Card. You have not applied for American Express card. You get the notification today. You're on the phone to them today, and you're able to stop this before anything happens. Okay, take that away and imagine you don't have any notification for credit monitoring, and in 30 days you get a statement from American Express that your card you just opened, that you owe $10,000 on it. What a nightmare. What a difficulty that is to deal with. So, to me, that is a huge benefit, and it's a huge value. And again, you can do it with a number of different agencies. You've seen Cyber Scout, Identity Theft 911, and some are a couple, $3 a month. But to me, that is a great value. You've got Social Security scanning, anything with your social, not just credit bureaus that comes up, mortgages, things of that nature. I mean, it's a great value. So that's another tool you can use. Safeguard your information, safeguard your passwords, safeguard your access codes. Don't write your PIN number on your debit card. I've seen that happen before too. That's a tough one there. But I'm gonna stop right now. Does anybody have any questions about anything we've talked about, of any kind? If you don't, that's fine. If you do, you can feel free to stop me after this, or I got my cards up here. You can call me. Something pops up and you want to discuss it with me, I'm happy to visit with you. That's never a problem. And the last thing that we touch base on is personal finance, and that's really an area that's it's not last because it's not unimportant. It's I typically will spend a couple of hours on each one of these topics, but I'm kind of hitting the high points of all three of them. Yes, sir.
Why are checks still used?
That's a good question. That's been a discussion because at the end of the day, you've got, in the old days, believe it or not, they put your social on the check. Up until probably 20 years ago, people would have their social on the check, they got the name on the check, they got the address on the account, on the check, they got the routing number, and they've got their account number. So that's a great question. I think it's something that is beginning to diminish. I can see it even in terms of our check orders. Things are diminishing. People use checks less and less, but it's still a point of entry and compromise. I'll tell you a quick story. It's been a number of years ago. I came back from a trip to Dallas and got my statement back when we got actual statements, okay? And I saw a check. I said, that's not my check. That's not even my handwriting. It's weird. So somebody had intercepted a check of mine at some point, had written a check to Walmart for, I don't know, $95, okay? 15 years later, I still can't go to Walmart and use a check, not that I do that anyway, to buy anything at $10 in value or return anything at $10 in value. So you get stuck in their system and it just causes problems. But no, to your point, that's a great point. It's something that's going away, but it's not going away as quick as I expected it to. But it's still out there for sure. And talking about budgeting, talking about financial planning, everyone's on a budget. Regardless of what you make, you're on a budget. And really kind of the rule of thumb here is 50% on what you need, 30% on what you want, and 20% on savings. And if you follow that, that can be a great tool. We talked about borrowing for mortgages earlier, and one thing I'll point in mind to you is, and really this is across the board, but the debt-to-income ratio. So really what that is what are your current debts in relation to your gross monthly income, okay? So what are your current debts and proposed debts, because you're coming in again to buy a car or a house or whatever, What are your current and proposed debts in relation to your monthly income? Who here, what do you think an acceptable debt to income ratio would be? You make 10 grand a month, so you need to have no more than X amount, dollar amount or percentage in terms of debts. What do you say? Anyone? Throw out a number. What's that? 20? You say, I mean, it could be whatever, but just make the math easy. You make $10,000 gross a month, so what percentage of that should be allocated, no more than for debt service payments? Well, yeah, the 30 to 40%. That's a good number. But bear in mind, you know, if you're making $10,000, $20,000 a month, you've got a whole lot more discretionary income than someone making $2,000 a month. So that figure can kind of fluctuate a little bit. But the magic number typically for your house payment, and that's your payment, your taxes and insurance, really needs to not exceed about 28%. That's kind of a good industry standard. And this doesn't include things like insurance, cable bills, you know, things like that. It's just structured debt payments. Structured payments that you have for whether it be credit card, boat payments, car payments, etc. Really, you don't need to have that total number to be about more than 45%. Things start getting a little top heavy when you get above 45%. There's a couple numbers that I would really encourage you to kind of keep in mind, but that's kind of an industry standard there. A couple more things before we wrap this up. I would really encourage you to keep this. All of the information for the credit bureau agencies is in here. There's just a wealth of information. Look over it, and I'd even save it and keep it for something, you know, in terms of if you need to refer back or contact any of the credit reporting agencies, or even if you want to get a copy of your credit report, you know, do that. But before we wrap it up and talking about budgeting, one of the biggest things that I see that are probably something that's overlooked is I deal with a lot of people that are grossly underinsured, and I mean grossly underinsured. You know, when I was your age, you know, you're going to live forever, right? So why do I need life insurance? Well, yeah, I tell people that you're not, as you get older and you get married, get kids, whatnot, you're not buying life insurance. Really what you're buying is peace of mind, knowing that if something happens to you tonight, that your family is provided for. So it's really not about the life insurance so much as it is peace of mind, knowing that, again, if something happens to you, your family is provided for. That's one of the biggest things that I see, because insurance is infinitely cheaper when you're younger. As you get older, the higher the insurance rate gets, because it's a bet, right? It's a bet. When you're younger, the bet is pretty good that you're going to live to be fill in the blank. As you get older, that bet becomes a worse bet. So it's something to bear in mind. And the last thing that I've seen is, you know, as you get your job, most employers have 401k plans and have matching funds. They'll match you up to a certain amount on your retirement. Take advantage of that as early as you can. Yeah, I see a lot of folks that don't do that as early as they can. And we talked about the compounding of interest versus, you know, 5% versus 2%. Talk about the time too. You're at 25 as opposed to 35, 45 to 55. That can end up to be a couple $100,000 when you get to retirement age. So it's a very powerful tool. The compounding tool itself is a very powerful tool, and one that I think a lot of people don't realize as they get their career started. So anyway, I have time for some questions. I don't know if anyone has any further questions, but you've been a very attentive officer. Yes, sir.
Curious, what's the highest credit score you know of, and how do they get it?
You know, I've seen some, recently I saw an 850, you know, 855, I think. That's about as high as I've seen. It's typically those credit histories are 25, 30, 35 years. They have pretty minimal debt. Any revolving debt is minuscule. It's paid off every month. They've had histories of car loans, house loans, and everything is just perfect. No collection items, no instance of any over 30s. It's just a perfect slate. And I've also seen, you know, people that, you know, for example, decide to pay off a bunch of accounts. And they decide to have accounts that have been open for 10, 15 years. I want to close it and pay it off. They start closing 3 and 4 accounts at one time. The model is kind of like, I don't know what's going on here. And I've seen scores drop 50, 60 points for people just closing accounts. Closing them in good order, doing it properly, just closing accounts out. I've seen it react to that as well. But longevity, we've answered that. I mean, long histories of credit reports. Yes, ma'am.
I keep hearing advertisements for
Oh, wow, yeah.
Is that a big thing in this?
It's not a big thing, but, so I've read stories about this, and there's so much here that I just don't have time to cover, but a couple in Clearwater, Tampa, they were snowbirds. They went, back and forth. So they come to Florida when the winter starts, and somebody's in their house. What's going on here? Well, we bought this house. So you can't bought the house. It's my house. You can't have bought my house. And somebody had fraudulently created title and conveyed title to a property they did not own. So that's exactly what they're talking about right there. It's conveying title to property that you don't own. You know the owner's gone because, you walk around and look at it and see what's going on. They've been out of town. Again, talking about dumpster diving, talking about whatever. You understand these people are out of town, okay, because they've had the cable bill turned on wherever for 6 months or whatever the case may be. So again, they're putting a puzzle together and they're coming up with a situation in which they have, and again, they're long gone, okay? But we see a lot of on wires for home purchases anymore. The old days, we take a cashier's check to the title company if we're financing a property, but nowadays it's wires. And we're calling the title company saying, hey, is this your account? Is your closing today? And just confirming every single part of the wire instructions because of the fraud going on surrounding real estate transactions. But title fraud is a real thing. I've not seen any occurrences of that up here, but it doesn't mean it doesn't exist because it certainly does. Yep.